So today I made a 62% profit trading spot. I'm going to get into how that went down. If you're familiar with the content, you know we primarily trade the 15-minute open range breakout. Real quick, I'm going to show you what the lines mean. The blue lines are the highs and lows of the pre-market. That's back there. The pink lines are the high and the lows of the first 15 minutes of price action. So 15-minute open range breakout is the first 15 minutes of the market open. So I'm on a 5-minute chart spy. 5 minutes of price action, 5 minutes of price action, 5 minutes of price action. Low, high. The white lines in between are my levels of support and resistance. The green line is the high of the previous day. The red line is the low of the previous day. So I usually trade volume and price action. So whenever a move comes, I look for the power behind it for confirmation that the move is solid and moving up or down. So the market opens, we set our range. I could have gotten in here with this break below pre-market low and retest, but I didn't like this high wicket candle, so I wasn't taking any chances. I'm not feeling the best, so I'm full transparency. I'm not on top of my game today, but nonetheless, here we are. So 15-minute ranges develop. We get these choppy candles with decrease in volume, so I'm not really sure that we about to keep this continuation down. We get the break at a 15-minute low right here. We get a retest at a 15-minute low right here, but there's a long buying wick, so this can apply that buyers are going to push this back up, and this candle has a lot of power, a lot of volume behind it, so I'm thinking a lot of this is buying pressure, so this could go back up to retest these levels. The next candle afterwards closes below, but very, very little power behind it, so I wasn't convinced. And then we get this, so I missed this huge move. Not really a fan of that. I was pissed off at that, but I had to lock in and figure something out.
I'm leaving here with something. You know what I mean? I'm from around the way. I'm leaving with something.
So what I end up doing is I draw a Fibonacci retracement from the open of the day, which would be the high, to the low of the day. And I wait for price to get to either the 50% retracement or the 61.8% retracement, about the midline of the day. As we start to approach that, you see the volume, the buying volume decrease, and then we hit this selling volume increases. So I hop in on the next retest of that, and I take price from here to here for a 62% gain on my profit, and that was my trade for the day.